Do, do, do. Good morning, retail traders. Good morning, Festus. We'll get a little bit more time. We'll get started on this. I'm going to pre-record it too, so it'll be recorded. For 30 more seconds. Boom. Good morning, retail traders. We're going to learn how to create, probably a lot of you already know how to create a watch list, but I want to show you how to create a watch list and how to use it to your benefit. So I'm going to start recording just in a few seconds and we'll be on our way. It's icy here in Missouri right now. It's going to be a real cold Chiefs game. They're playing Miami. So let's get started. Welcome to the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And today we're going to talk about how to create a good watch list. Now, I was showing examples this week in the room. We had an opportunity to create a watch list with ETFs that are coming out with Bitcoin. And there's all kinds of benefits of having a watch list. I kind of got spoiled with trade ideas. I had trade ideas for 7 years, 8 years, and traded off that. And we all have different strategies that we trade off of. I was trading new highs and new lows and getting the ones that popped out and the ones that dropped on that. And that was my watch list, trade ideas. And I used it religiously every day for 7 years. And I kind of got complacent, I think. It got too easy, and my brain kind of stopped working a little bit. I was able to work at some other places, but develop a strategy. I developed a sneaky snake strategy about 3 years ago where I catch knives. I'm probably one of the best knife catchers out there. And having a good watch list benefits in that kind of strategy. So let's get started. We'll go ahead and put this to the side. One thing I like to do when I'm creating a watch list is keep it fresh and simple. And I'm going to give you the 5 steps that I look to when I create a watch list. And more or less, I'm guilty of following someone else's strategy, just like anybody else is. Now I wanted to learn how to create a good watch list, so I Googled it on Google and come up with these 5 steps. And that's where I started 20 years ago when I created a watch list. First thing about trading and depends on how you are and what kind of person you are. I like to keep it fresh, simple and fresh. I like to keep it real simple of my watch list. I don't need a lot of rigmarole on there. I just need to know what kind of stocks are moving. I need to know the volume. I need to know the percentage, and I need to know the price. That's about it. There's all kinds of different criterias as a trader. We're all trade different. So you could add a few things to your watch list that maybe help you, like an IV ranking, or how many shares, or new high, new low, or the bid and the ask. And we'll show you how I create my watch list here in a second. So the number one rule is keeping it simple and keeping it fresh. The number two rule is start off big and then go small. Thin it out. Clean it up. The market's always changing. There's always something new. There's always a new sector running. Right now we've got AI. We got Bitcoin. We had the Bitcoin run there for about 2 or 3 months into the ETF. So anybody that knows how to trade Momo, which would be the ETF run that we've had, or the Bitcoin with Mara and Riot, you always know to buy into the news and sell on the news and let it consolidate. So once the news hit, hopefully you're out of the stock. That's start big and then thin it out, make it smaller. And then number three, this is one that I really try to emphasize with people. Play your favorite trades, your favorite stocks that have done you well. I trade stocks with good volume. I got to have volume. I got to have news, and they got to have cash. I got to where I was trading penny stocks for a good long period of time, and that changed. It got to where they all just sold off and never did bounce. And that was 20 years ago. Well, actually, probably back in 2007, 2008. I've been trading before that, but it was more or less through a broker. Then I got me a gateway computer, and then I realized, hey, I could trade stocks and make a living at this. So that's number three. Play your favorites. If you're an athlete, or if you're a geek, a computer geek, you might be interested in trading tech. Or if you're an oil man or a construction person, you might want to get into that sector. Sectors that you know. And we'll talk about sectors, dividing your watch list up. So play your favorites. Find what you want. Find different ways to scan stocks. Find different outlets for information to create a watch list. That's very important, to be able to find ways to create watch lists. I create them through scans. I create a watch list through CNBC. They talk about the same stocks every day, in and out, every day. They're probably one of the biggest pump stations out there. Every day they talk about Apple. Every day they talk about Microsoft. Every day they talk about NVIDIA. Every day they talk about Eli Lilly. So these are momentum stocks, and that's what I like to trade. Momentum stocks with a little bit of volatility. People are going to take profit, they're going to sink, and they're going to bounce right back up. So I'm really good at trading the momentum with high volume and stocks that are talked about. Get ideas from your friends. I never say jump into a trade. Always wait, do your homework, and then see if they have cash. You're better luck to find companies that have cash. You'll have less volatility. You won't have them hard sell-offs. And sector runs. We had the EV sector come out. We had the cannabis sector come out about, 13 back in 2010. So I traded cannabis until the run was over, good half a year, 3 months, and then that faded away because, it wasn't legal back then. It was barely getting mentioned. Then when they legalized it in Canada, it gave me another watch list. I was able to pull up stocks that were from Canada when they legalized it in Canada. That was cannabis. And then we had the EV run. We had the dot-com bubble where everything Wahoo Finance ran to $600. We got Google. Now Google's being mentioned a lot. We got Amazon. So those are the kind of stocks I like to mention. the ones that I created a watch list off that. Now, step number 5, keep up to date. Don't get complacent. Just because it's Apple and it's mentioned every day and they're pumping it up and there's no bad news, we come into the new year and we get 3 downgrades on Apple. All of a sudden it tanks. I've been watching Apple for 20 years. I know what kind of stock it is. So I've never got complacent with Apple. I know Apple wasn't a big runner. It was a market maker, but it was never a big runner until lately. And same thing, I look at Tesla every day. It's on my watch list. It's on my, and so be in the now. Make sure that you read up on the news. Keep it simple. Keep it simple and fresh. Start off big and delete the ones that aren't doing too well. And then who knows, they might come back up in a month or two. They get mentioned in the news. Add it back to your watch list. It's a priority to know that if it's not moving or if it ain't doing its thing, you still want to keep it in your mind fresh, but you still want to have a clean watch list. If all of a sudden, okay, such and such, Eli Lilly just got a FDA approval of a fat drug that will make you lose weight. Then, they've been pumping it and pumping it and pumping it. Then all of a sudden they bring, well, it'll save your life. It'll save your blood pressure. It'll maybe keep you from having diabetes. Now they're talking about Alzheimer's disease. They might help with Alzheimer's. So there's always something new coming out. So be in the now. And we're going to go ahead and I'm going to show you a watch list that I created and how I created it with the ETFs. I knew the ETFs were getting ready to be accepted through the SEC and they were going to be tradable. I also knew that we've had a huge run on some of these stocks like Mera. And I take that in consideration when I got my watch list. Like, let's take a look at Mera. If you pull up the yearly chart on Mera, just look at the bottom that we had. We were down here at 730. We had a big old cup and we had a handle. So there's your chart pattern right there. It's a cup and handle. And then we had a run from $7 all the way to 32. That's almost a 5 times, 4.5 times, 450% gain on a stock within 3 months. So I get very, 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 very leery of a stock that's ran up so hard and so fast in such a short period of time. Same way with coin. I mentioned coin last week, and I said this might be a good one to short because we're going to be selling into the news. And it also had a triple bottom down here. One of my trading strategies, 1, 2, 3, you can trade with me off the 200 SMA. And that sucker was a great buy right there on that candle. And it ran all the way from $76 to 187. So in 2 months, 2.5 months, actually 2 months. So I knew that thing was way overbought. And I went ahead and I put the Fibonacci's on there and we pulled right back to where that 50% is, where I'm getting interested in buying it again. But understand, this was a sector trade. This is in the Bitcoin sector, and you sell into the news. Now, maybe some more people might be interested in trading these ETFs when they dip and kind of walk away from coin, because that's going to be in some of these ETFs. So maybe some traders are going to walk away from it, sell it, and then jump into the ETFs. So I think I kind of got that down. Keep it simple and keep it fresh. Create a separate watch list based on certain current factors. Right now we've got AI, so you might want to have an AI watch list. Stocks that are your favorite AI tickers. Like, even some of them are, even Amazon could be one. You got Nvidia, you got AMD, you got Microsoft, you got Apple, you got TSM, any chip maker stock, any semiconductor stock. You got Intel. Intel had a real big run. Intel's been a sore loser for years, and all of a sudden AI comes in, and now they're talking about Intel again. Intel was the number one trade. IBM was the number one trade, and they always find a bubble. Everything finds a bubble. So I've always watched Intel, and then when we hit the bottom on Intel, I said, hey man, this news coming out, they're starting to pump Intel. It's like what happened with the airlines last week. We had that tragedy happen in Alaska, the Alaska Airlines. It caused a lot of these stocks to pull back. So I want to get a watch list ready of airlines, and I'm going to find out which one they're pumping the most, which right now they're pumping Dow, D-A-L, and it's had a good pullback. So we could come in here Tuesday and trade Dow. That's called a sympathy play. So I'm going to create a watch list of current factors. That's a current factor right now, being in the now. Plan a personal time to clean your watch list every day. Go over it. See which one's not producing enough volume. See which one's having the worst news. You might want to take it off or put it on the bottom of your list, or however you which one. So you want to clean it up. You want to make sure that it's clean and fresh and simple. You don't want it to be overcrowded. I would say everybody's built different. Me, I trade one stock at a time because that's all I can handle. I can only handle one trade at a time. If I get involved in two trades, I just can't do it. I mean, I can do it when the market's very bullish, but when we're at an all-time high resistance, I got to be a little bit more complicit. Not complicit, but what am I trying? Disciplined. I got to be more disciplined. I don't want to overfeed my brain. I want to make it real simple. So cap that list to 12 to 16 stocks. Start off big, maybe put 25, 30 on it. I got one right here. Let me see. Well, where's that big thing? That's my Bitcoin ETF one. Now it'll come around somewhere. I'll look for it. I got one that I call 2024, and we'll get down and look at it, and we're going to try to clean it up and make it real simple and easy. So step number 2, start off big and then go small. You want to start off with a broader set of criterias and like if you want to, however your trading strategy is, you want to separate your watch list in different strategies. Like I have a 3 black crow strategy, or I have a 52-week high strategy. I want to start off big, and then I want to thin it out. The stock market constantly reinvents itself. It's constantly changing. Maybe your list was doing good for a couple of months, and then that sector just went dead. So maybe you want to start with a new watch list, create a new one that's running for that quarter, like banks. Your success depends on what type of securities you are trading and the strategies that you're following. So make each watch list to fit a strategy, like maybe the 9 EMA crosses the 21. Set you up a scan, and then create that watch list that early morning, say, or maybe you have a watch list that's just all about upgrades for that day. You go to your upgrade scan, and you see what stocks have been upgraded today, and you see which ones are, and why were they upgraded? Are they overpumped? Is there real good news to justify the upgrade? Or is it just a price increase and some fat cat's trying to pump his trade? Start off big and then go small. Thin it out. Step number 3. Play your favorites. I can't emphasize how important it is to play your favorites. You know, I like tech. Tech is always going to be my game. When they pull back, I'm still going to play tech. Banks. I noticed that all the banks on my watch list were real cheap at one time before we had this big run. And the big run started once, and being in the now. Powell decided not to raise no more rates. So I gave the room 2 weeks in advance notice. I said, we're going to have a real good run into the year if Powell comes out and says he's not going to raise rates. And about every stock in the book ran. So I was prepared. I had J.P. Morgan. I ran it all the way up. J.P. Morgan's the best bank out there. Bank of America is probably one of the sourest banks, or Morgan Stanley, Citibank. So I told the room this week, I said, we got earnings coming up, and it's going to make my decision. There are going to be a lot of banks on here. We're going to have healthcare, UNH. So I'm going to prepare myself to take some of these trades. And again, they were all bad, all but J.P. Morgan. But yet, if you watched that day, and I mean, I was sitting here snapped on the monitor listening to the CNBC talk about these banks, and they're the big pump station. So Citibank pulls back on bad news, but then they come out and they start pumping Citibank, and it had a nice little run to the upside. If I didn't have that watch list ready and I didn't see that percentage pull back, I don't know if I would have took that trade or not. J.P. Morgan, it pulled back. Now, sell into the news, right? But they're going to be pumping J.P. Morgan. They got a price target to 220. And so earnings is going to be my watch list for the next month. Every day earnings come out, I'm going to be doing studies on these stocks, and I'm going to see if they're going to pull back, and I'm going to take advantage of it. But that's going to be on my watch list. You know, I got it here in the room. I got a little place right here where it says earnings. And each one of these here earnings things I'm going to be taking, like this was, well, let me see here. Can't be reached. What's going on here? Invalid response. Something's acting funny. Well, I got the banks on here anyway. So I watched every one of these banks. BlackRock, every CEO came out. We had airline Dow. We had that tragedy happen last week. So I got on I created a watch list for airlines. And I watched Dow, I watched Boeing. I said Boeing's going to pull back. They were trying to pump Boeing this week. Now they're going to find out what the problem is with Boeing, and everything's going to be fine, and we're going to be back to running them up in a week. No, that ain't the case. This was a serious situation, and it's going to take months for them to go through all them planes, and I don't think they should stop with just that one plane. I think they should go through all of them. If you remember what happened when they had the wrecks, Boeing just tanked. I mean, it sold off huge, and it never did recover for a year or so, or two. J.P. Morgan, United Healthcare. I mean, this was a big Friday. TSM was even on here. BlackRock. So I made a watch list out of that just for that Friday for them earnings, and I watched all these trades, and I listened to all the CEOs talk about how good their companies were, and, you know, some of them were having difficulty. Citibank, that was a good one to trade. So that's why I only trade one at a time. This market fluctuates so much. So I'll be ready for next week when earnings come out next week. The 16th, we got Goldman Sachs. Now, computer's acting a little, Discord's having a little bit of issue, I think. So we just take this off. For right, oh, dadgummit. Let me find that Discord. Definitely having some issues on Discord here. So step number 4, find what you want. Scan the market and know the criteria that you're seeking. So build scans and put them watch lists in different kind of categories. Like I said, the 3 black crows, or maybe the 52-week low, or the 52-week high, or maybe a VWAP scan, or maybe a high volume scan, or maybe a breakout high percentage scan. If you go through Ameritrade, there's all kinds of scans in here, and you can save your scans. Load study set, and I've got like let me see here. Like right now I'm showing high percentage gainers. I can go through here and I can find ascending triangles or descending triangles with high volume, AAL, Dow. So that's telling me right now, with the high volume and the sell-off that we had, we could have some real good opportunities in these sympathy plays with Boeing and Alaska Airlines. SPWR, solar stocks, are no good in the wintertime. They start kicking up in the spring. So I might be looking for a good buy on this one right here. But this is a scan that I set up, and that's a watch list. So you can set them up with scans. I've got the same thing here. I've got this one that it's called 1% high. 2% high. Stocks that break out at 2% or above. We got Daku. Daku had that great news. Now this is going to be a highly motivated stock. I'm going to look for a support, which I see it right here, and I'm going to set me an alert. And if that thing pulls, we're at a double top. So that's like a resistance level. But that's another idea of creating a scan and having a watch list. And I've got the VWAP scan, scans that are bouncing off the VWAP. And I can go through here and look at the high volume scan like SWN, and I want to see what kind of news is going on with it. I'll pull it up to a 5-minute, 5-day. We had a big knife right here. Maybe that could have been on the percentage losers that day. And look at that. It come in the morning and it's on your scanner, and it's been a good runner, and all of a sudden it's red like VCIG, and you have a big knife all the way down from 633 from 695. That could have been a nice little trade, or at least an idea maybe to take the trade at a double bottom if it came back and pulled back and hit that double bottom, swing it into the next day, back up to resistance. So I create scans with different criterias. I want to try to make it, I got scans in here that, then Ameritrade, and I'll show you another strategy that I use, how I find scans through different platforms. You can find them on the internet. You can, like if you're a Twitter dude, you can get on Twitter and see what your best friends are pumping or mentioning that day. Pumping to me is just a mention, but we know the difference between a pumper and pumping. So I get down in here and maybe I want to look at the Dow. They've been talking about the Russell 2000, wanting to get out of big caps and go into small caps. So we got the Russell 2000 down here, and I want to look at the highest volume that's coming out on the Russell. We got Mara, which sold off, which would have been a great put call after the news. We got penny stock here, GOEV, not doing too well. Riot, most of these are FSR. These are small caps. I doubt if I'd be trading them. I'll probably stick with we got your lovers and losers, your downgrades. You can see what's been downgraded that day. Maybe you're in one of these stocks that got downgraded and it bounces down, and then you have an opportunity to maybe add on to it and get out of the trade. Maybe you're in here and you've got your post-market and your pre-market movers. You can look at what's moving pre-market, create a watch list off of that. Say, well, then look at the news, be in the now. Use that to your advantage. So last week, one of the people in the room, we were wanting to know what the ETFs were coming out. So we had this news article, Bitcoin ETFs begin trading in the U.S. exchange. And then it gave you a list of all the ones that were going to be trading in the US, in that exchange. So I'm going to have a strategy when I trade this. I know to sell into the news. When the news is hit, I don't want to trade it. I'll put the 3-day rule in it. I'll add it to my strategy, and I built a watch list. Let me find it. I built a watch list off that, and every one of them's red. Everyone's pulled back. Some of them, a couple of them have been in here, and most of them haven't. But I want to keep a good eye on the volume. Which one has the highest volume, and which one's hitting the news. They came out with that GBTC, and they were bad-mouthing it this week because it costs you like 1% more than it does to get into these others. A cost to get into that. You've got the Kathy Wood one. They all pulled back some. So I think that was it with all the criterias. Being in the now. Find what you want and stay in the now. Constantly go back to your watch list, your favorite stocks, and read up on the news. Pay attention to the news. The news makes stocks run. I don't take a trade until I look at the news. And if I'm not feeling comfortable with the news can break down in different factors. You could have a headline, phase 3, and when I see phase 3, I don't want to take that trade. It's going to cost money for phase 3. I want to take the trade when it gets FDA approval. That's when I want to take the trade. I don't want to take it on phase 1, phase 2, or phase 3. It'll start getting momentum, and then the volume picks up when that FDA approval comes in, and then that's when I'm excited. Or when I think it's going to be coming out, and I think it's going to be approved, because you'll hear it like on Eli Lilly here lately. And I know that one's way too high right now. So stay in the now. Familiar yourself with the stock that you're changing. You know, what kind of market cap does it have? Is it making earnings are coming out next week? I want to keep an eye on this one stock because I want to be in the now. And I'm going to study and see if earnings are good. I'm going to go look up on the computer and listen to what people are talking about it. See if anybody's doing any YouTube videos on it. And follow be in the now. Follow your favorite traders that will alert good stocks. Don't go in there. You always got to be in the now. It's very important to keep that on your watch list. And keep it simple. If you got 10, 12 stocks on there and they're always running, they're always in the news, you've got to understand what that news is. The reason why I didn't like Apple at the end of the year, because the CNBC is pumping it every day. And it's too involved with China. And I wouldn't want to be in too much of a stock that's so entangled with China. And the last 4 quarters have been pathetic on Apple. And then that next week they get the ban on the Apple Watch. So I'm saying I'm going to buy a put. This thing's been overpumped, over talked about. It's been irrational exuberance. and this thing's going to pull back to a major support, and I nailed that 180. I did a video. If you go back and watch it, every video I do is a learning lesson about chart patterns, moving averages, and being in the now. That's my third criteria of taking any trade, is I got to be in the now. I got to know what's going on. If they're not making money, and if they're getting downgraded, I want to get out of it as soon as I can. And I want to buy the dip, or I'm going to add on. So I got to see if they've been downgraded. Have they had price increases? Did they get, did all of a sudden Apple, they pump it up to 220? And I'm going, are you people idiots? I said, I ain't going to fall for that, because Apple's had too big of a run. And it's not that big of a stock. It's had bad quarters, quarter after quarter after quarter. It's been bad. It ain't been very good. So I knew, being in the now, that stock was not going to hit their criteria and break out for New Year's Eve. They were counting on it because it's a market leader, and they wanted this, and we're at all-time highs on the SPY and the SPX. So there's other reasons that you got to be in the now about besides the stock itself. What's the trend of the market? What's the trend of the sector? Is it, AI is still getting hyped up, and all of a sudden this week we get a bunch of layoffs. Wall Street loves that, but the people out there that are working can't stand it. So that could cause the stock to run up next quarter and maybe dip today. So we're going to go back to that 3-day rule. I created that watch list on this Bitcoin ETF. Now we've had 3 days of selling off. And I've already charted this thing out. I have a certain strategy that I trade when I'm trading pullbacks. So the news came out. We run up to, look at this here. Look at this. Look at this. It's been on a constant run. And then we had a little correction to the 200. And we had another bull flag here. And then we broke out for the last 4 months. And I would expect, coming from $10, running all the way to $43 in 1 year, is a little bit of irrational exuberance. I've seen this over and over and over and over again. Sell into the news. So I'm going to be watching this now, and I'm going to be waiting my 3 days in this trend. We'll go back to that 5-minute. So my strategy is knife catching. And I count to 3, you can trade with me. So we've got a 1, 2. Maybe this thing could come back for the 3rd time. Here come Tuesday, and then have your 1, 2, 3 and bounce and break this resistance. I'm not going to be in a hurry to take this trade, because I know once it breaks this resistance, it's going to pull back. And then when it pulls back and maybe bounces off this trend line, I'm going to take and jump in it and run it back up and break that resistance and go back up to the sky. But they always pull back, and that's called my 3-day rule. We'll have 3 days of sell-off, and if it doesn't start to curve up to the upside, I'll just wait. I won't be rushing into the trade. I'll have to find another criteria to take this trade. They're going to be pumping Bitcoin. They've been pumping it way too hard here on all these stocks. You got this Kathy Woods one, ProShares Bitcoin Strategy. I've got this chart all set up. I know exactly where my support is. It's been in a Darvis box for almost a year and a half. So if this thing pulls back to the bottom of this Darvis box, that's my trading strategy. I might take that trade on the 3rd day and run it back up to the top of this box and get out of the trade, because I know that's a hard resistance. So I could take it from, well, that's not very much money. I don't know if I'd be interested in it or not. We'll just have to see. If it knives down and hits one of my movement like the 50, I might go ahead and take it, but it'd be something to watch. Then I go 3rd on my list, IBIT, with 22 million in volume with a pullback of 6%. This just opened up. So I want to take it to 5-minute, 5-day. I've got my snake breakout ready. We broke out of the snake. It's going to run up and hit the 200. That's my strategy. Pull back, maybe land off the 50 again, and then bounce up and break out to the upside and find resistance at $27. But it's got to stay above this trend line or it ain't going to be no good. Then if it does pull back, I might be able to get a 1, 2, 3 down here, triple bottom, and run it up and break it out to the 200. It could get overbought because these things have been up so high, so much, so fast. And it's called irrational exuberance. When the market's real greedy, I can tell when people are real greedy, especially when you're at an all-time high for 3 years in a row on the SPI and the SPX. So I come in the morning. I'm sitting here and I'm looking at I want to get what kind of mood I am in the market. Are we breaking out first thing in the morning? Which tells me we could probably have a pullback. We had that big, huge breakout in the morning. I'll be ready to buy the dip, find support level. And that'll get me in the mood to what kind of watch list I want to use. You know, if it's the IWM or the QQQ or the SPX and the SPY, and I can get that trade out of the way first thing in the morning. Then I got me a nice green trade going once I see the pattern that we're going to develop. We have like a little wedge right here. We have a big drop off here with a double bottom if you have enough patience to wait. And that's what you got to have, patience when you're trading these stocks. We had a little double bottom right here. We hit that pre-market low, and then we bounced on up with the IWM. So I want to keep that watch list fresh, and I want to feel what kind of mood the market's in when I first come in the morning. I'll be looking at the upgrades. I'll be looking at my main watch list. And that's going to be, and we're going to thin it out. Yeah, I should put it on my other one here. I titled it 124, so I created a watch list at the first of the year. But I'm going to detach that. I want to delete it. When I come in and I look at my watch list, this is my one. This is the seasonal watch list that I'm going to keep going all year long. I'm going to thin it out and I'm going to upgrade it. I'm going to look at what's not moving, the volume leaders like aluminum. Now I know it's been getting some bad news. We got FedEx. FedEx is one of my favorite trades. Pull up the 20-day 1 hour. We had that big knife and it really never has consolidated. We had earnings and it was pretty bad. Or at least it brought the stock down. And I think we're going to have a pop once they come out and they realize how much money they made when it comes time for shipping and stuff. Humana is a sympathy play to what happened to UNH the other day. So I come in here in the morning and I'm looking at Humana and I'm saying, man, this might be a nice little knife catch right at open. We could run this back up and collect $5 or $6 off this trade, run it to a double top of that candle. Johnson & Johnson had a real good run here. I want to look at the high volume leaders. I want to see what's breaking out. Why is Merrick down so much? Sympathy, because they passed that bill. And I don't trade this that much because it's speculative, but I'll trade it if it sets up to my support level. Tesla is, and I know Tesla's been going down because they closed that plant in Germany because of the Red Sea. They can't get parts to Germany, so he has to close the plant down for a couple weeks. SPY's my everyday trader. Sophie had a real hard sell-off. I got to watch my videos and read up on the news. Why did that happen? You know, a lot of people were pumping Sophie to go up a lot higher, but I wasn't, because we were at a hard resistance level. If you look on the yearly, we're at a head and shoulders right here, and we hit that head and shoulders and stopped. And that's a chart pattern. So that tells me that we've found some resistance, and I'm not going to be too excited about taking this trade at these extreme levels. I'll wait for the pullback and look for another pattern and take it. We got a snake right here, breakout, pull back, so maybe she'll be ready to start bouncing here pretty soon. We got to read up on the news. Apple was probably one of my best trades last week. I did a video on Apple. We had that hard sell-off on all that bad news. I called 180. I was 4 cents off, and I called that 180, but that's on my watch list. And I traded it all to the upside, and I said we're going to get back up here to 186. If you go back and watch that video. Citibank. So this was a sell into news, into earnings. Earnings came out. I listened to the CEO, and I listened to the pumpers on CNBC. They love Citi. Well, they were making excuses about Citibank, and they went through a lot of reconstructuring to simplify the company, which I'm going, why you do that now? Why haven't you done that years ago? But that's one of their big pumps. NVIDIA, this was a good one. And this has been on my watch list. And every time NVIDIA had hit $400, I'd call this trade out, because we had repeatedly hit that $400 and bounced. And that's a $400 to 5, 4 to 480, 4 to 5. And right at the end of the year, I sent a message to Jim Cramer. I said, you're going to get your 650 after we started the new year. Every week is a new week. Let's say you had a bad week, a 5-day dip like we had it last week, where the market, everything sold off at the 52-week highs. So on my watch list, I got the SPY. And I want to be in the now. And I pull up the 3-year time frame. And I'm going, damn, we're at an all-time high, and we haven't broke that resistance yet. So anybody that does research would Google double top. And what does a double top tell you? It tells you that we hit a hard resistance and that we're going to consolidate. And this is on a weekly time frame, an all-time high. And we run into this irrational exuberance. And I kept telling the room, I said, man, I have not seen anything like this in the 20 years that I've traded into Christmas. I've not seen it happen ever. I said, this is very irrational. And we run up to that double top, and traders know that we're going to consolidate on that double top and to be a little bit leery. That's NVIDIA. We've got Rivian. I was all hyped up about Rivian, and then the word came out that they weren't building that many cars after all, and the thing pulled back. So I'm glad I wasn't swinging it. That's why I trade one trade at a time, and I do my thing. Coin had an immaculate run. Immaculate run off this here triple bottom. All-time high for the year, and it just seemed like it was way too much into the ETFs. So I did a video on how to trade these right before that ETF came out. I said, let's put the fibbies on them. And you go back and you watch every one of them stocks that I had on that video, they stopped right at that resistance. And they all pulled back to that 50%. So I knew that we could have tonight. When I come in here Tuesday, I might be trading this stock. Now, if you look at the candlesticks, we had two engulfing candles all the way from 162 all the way to 130, which is a $32 sell-off in 2 days. That's a huge, huge dip. The last time we had that, I mean, when we hit the high, we had these engulfing candles, and then I had that bull flag right there. So we got the double bottom working right now, and a double bottom is just the opposite of a double top. So we could consolidate, but speculation is that people are going to maybe want to start trading these ETFs and shy away from these. I'm going to be watching it Tuesday morning because I think I can get a trade out of it. I was ready to take it Friday and I decided not to. I had my order already filled out right here. I was going to take it. It's on my watch list, and I've been watching it for a week. I called the pullback and took that. So I had this coming week, January 19th, strike 144, and I was going to take it, but I decided not to because all the other stocks were doing shitty. I just didn't want to take that risk. Meta's coming out with them Google glasses. So these are all high volume trades with cash. Meta has $20 billion, so it's always going to be in play. And if you pull up a 20-day time frame on Meta, 1 hour, you got a cup and handle right here with the breakout, and she pulled back to the top of that cup. And that could have been, and that I think I did take this trade. I got in it, had a little bit of trouble with it. I had to average down to 303, and then I got out of it, and the thing run up. Oh, crap. Could have made $500 a contract on that trade. If all I did was hold on to it. Google's constantly being upgraded and talked about, saying it's undervalued. So the banks, if you listen to CNBC, they're saying they're all undervalued during PE ratio. That means that they're undervalued. Well, they were a little late to the vote on the banks. They put up like Citibank. I call these banks at the very bottom. I had a watch list going on these suckers. And we had a little flag right here. And then boom. Now we're at resistance levels. We broke triple top. Moved up, pulled back to that triple top. So Citibank might be in play. They're pumping the Citibank. But I called this thing down here. I'd rather buy it at a good support level. So I've had this on watch under my bank's watch list. And I kept watching them every day, calling these trades out. Finding resistance. And then earnings came out. Boom. So I take and I look at the ones that have sold off the most that day. See if I can get me a nice little bounce trade on it. We got the Bitcoin, we got China, we got healthcare, we got the bank. CVS has been a good one. AMC, here's a pump one. There's some kid pumping these stocks. They think it's going to bounce, but in being in the now and being an older adult, I'm not into this. I'm not into Hollywood anymore. I'm not into wokeness. And this would be a trade that would cause me to want to short it even more. It's $5 billion in debt, and people are trying to trade this stock. I think they're beyond stupid. And if you know AMC, it's been a meme stock for many years. The controversy with AMC was when, and it involved retail traders, they tried to short AMC on a big breakout, and this millionaire lost millions of dollars because the retail trader came in here and pumped it all the way up to 300. It was crazy. And ever since then, it's had a bad reputation because of that. Same as Piton. Piton had an accident with a child, and it killed a child. And this thing was one of the best stocks into COVID, because people were staying home, being in the now. People were staying home, adding their third bedroom just became an office, or their third bedroom became, or the basement became a workout bench, because they were no longer allowed to go out and exercise at these exercise places. so they had to bring it home. So Piton was a great one to trade at the time. It's all about, you got to be in the now when you have a watch list. I think it's very important. JP Morgan is the most highly talked about bank out there, but we're at a 3-year double top all-time high. I'm not going to be ambitious to listen to these guys call this out to 220. I'd rather let it, I know what a double top is. I know what a double top is. And I'm not going to take that big risk on the humongous run that we've had on this stock. It just ain't going to happen. If you pull up the yearly, there's a straight climb to the upside. I've never seen anything like it. When Powell came out, said he was going to stop raising rates and wait until they start cutting them. That's when we're going to have the other breakout. When they start cutting the rates, I'm going to be taking JP Morgan, and I'm going to jump in it, and we're going to run it up to 220. Because it's going to be a big catalyst for these guys to break out of this here resistance. Right now, they're disappointed. The numbers came out this week were too good, and they're thinking, well, we might have overpriced the market 6 rate cuts. I'm going, how in the heck can you call 6 rate cuts when they're not even one of them have happened yet? They're trying to price it in, and they overpriced the market. They just overdid it. NVIDIA is the same way. They pumped this stock to 1,200, 1,150. The stock's going to 1,200. And I'm going, are you people nuts? That's 100%, 110, 120%. That's a 300% gain. You can't do that. So at the first of the year, I gave it all a green light. I said, we're going to start breaking out of this hard resistance that we just couldn't do for 7 to 8 months. Netflix is another good one. It's on this watch list. So I'm looking at all the red ones. I'll be watching these into next week. Then I'll go up to the percentage high. This is just how my strategy is on trading these stocks. Meta, Eli Lilly, I think is getting pumped too much. I really do. This thing went from $300 to $644 in 1 year. You've got to be kidding me. You look at the 3-year chart, it went from 178 all the way to 6 something. I'm not going to fall for it. I've been playing puts on this every day it breaks out. Every day it breaks out, or every day it pulls back, I'm buying calls or I'm playing puts. We broke out, I bought a put, I sold it, and then she runs up. We had a double bottom. We had a pullback, breakout, double bottom. Great trade right there. Great trade. Double bottom is different than a double top. You get a double top, you're going to pull back. So I knew coming in Friday, when we hit this double top, I'm going to buy a put. I'm going to bring it down, and then when it finds some kind of support system in here, I'm going to run it back up. Just exact same thing happened right here. We had to sell off into close. We opened up high. I decided to go ahead and get the put, or I didn't buy the put. I don't think I did on this one. We broke out, and then we came in here with a double bottom, and that was time to take the trade. But I watch this every day because it's being highly pumped. Citibank's on here. I watched it pull back pretty hard and jumped in that trade. Google's same way. So I come in here, I look at the volume. I see what's not doing very well. I called out this BYDDF thinking we were going to run. Pull up the 20-day 1 hour. I did a video on it. We did break out to the upside, and then it pulled back to support, which I have on this trend line. We'll pull up the yearly and see where I got that from. And that's from a pivot point off this here head and shoulders. Then we have an expansion pattern. So this stock could pull back down here maybe, hit a double bottom right around 25 bucks, 25.50, and that's $2. That's a $1.50 dip. If that holds support, that'd set me a little alert, just a little bit above it. And I'm getting this off this watch list. And I'll be ready to take that trade if we pull back and hit that double bottom. This is how the blowhorn patterns work. Or I go to 1, 2, 3, and we get some news. We break the 9 on the daily. I'll run it up to this 1, 2, 3 and get out of the trade. Sell it at 28.79 because that's a pattern that I'm trading off of. And there is some resistance right here that was support. That's a pivot point on the yearly time frame. So I'm going to draw a trend line on there. Be ready for that. Set my alert and I'll be ready. Just in case we hit that, I get an alert. I said, dang, man, we're at the pivot point. That's a hard resistance to break. I think I'm going to short it back down to the pivot point here in the middle of this chart. Right here at this double bottom low right here. If we do break out of that and comes back down, I bet you it stops right there at 27.14. I almost guarantee it. I've seen it happen too many times. So, creating a watch list, there's 5 steps. Now, I forgot what I had on here. It's definitely changed. Well, that was my mistake. I should have left that. I can't remember what stock it was now. We'll just go back to the article. Keep it simple and keep it fresh. Start off big and then go small. Play your favorites. Find out what you want and stay in the now, which I think is the #1 rule. And keep it simple and not make it too big. Know where the market is. Being in the now. I think that's probably the most important when you're trimming your watch list. You have nothing but bad news, you might want to get out of that trade. Or get into it or short it, like coin. Coin had that news, we run it all the way up from 70 bucks to 180 in 2 months. It was bound to pull back. Pulled right back to that 50%, so I'm going to be watching this real close Tuesday. And I think that's about it. Have an EV watch list. Break them down in sectors. Come in the morning and look what stocks have broke out. And then maybe fine tune a little watch list. Like we know Meta and Google and Amazon and Microsoft and Apple and AMD. Any of the tech stocks that have anything to do with AI. It's the big thing. I think it's bigger than almost as big as the dot-com era. If you remember, Alan Greenspan said, he said, irrational exuberance when we had all them stocks running 2 or 3, 4, 5, 600%. Bitcoin, when I was trading pennies, 0.001 would run 2 to 3 to 4,000% in one day. Just the thought of, and Bitcoin was at 200 bucks. It ran all the way to 2,700, then it ran to 5,000, then it went to 15,000, then it ended up going to 75,000. But the mention of Bitcoin, Kodak, of all things, mentioned Bitcoin, and it run like a Dickens. All they got to do is add that little headline in there. So any of these stocks that had Bitcoin in it would run. Same thing with AI. You got a new company coming out, and they're going AI. All of a sudden, the stock has it. You don't see it in the headline. All of a sudden, you see it in the headlines. Then the stocks run. EV car sector, same way. We took Nile when I did my EV watch list. When I was trading with Vegas, Nile was at $2. First, it started to be 10. And this was the big thing. We took it all the way down to 119 to $2. It never could break 10. And then finally, when it dipped on down, we had that double bottom down here. I said, man, this looks nice. Then we had the big run, and people were saying, freaking out. Once we got up here to 65, people started saying, Jim, where's it going to go now? I said, man, we're starting to consolidate. I'd get out of this trade and let it pull back. And I got the wrap because I got out a few dollars before it hit 66. And then people got stuck in the trade and started knifing on them. Well, Jim, you were right. Shrimp was another one that we took. SHMP. And this has had some bunch of splits. But this thing run up to $100. Shrimp did. Now it's back down here to 0.012. And it's a pretty good idea. I mean, it was back during clean energy. This pump on clean energy. So everything that had anything to do with clean energy, I've created a watch list off of it. And the mention of anything that stopped the oil getting into the ocean, or anything to solar panels, the EV car sector, it's all a big scam. That's why we're so far in debt. Most of that debt comes from clean energy and the welfare system. But everything has a bubble. Everything has a bubble. So my best things to do is, when I'm creating a criteria, I want to be able to create it with my strategy. How do I trade? How do you trade? Everybody trades different. So if you like to trade breakout stocks, if you like to trade 52-week highs, if that's your passion to trade 52-week highs, let me see here. I'm going to watch this at. I'll definitely be watching Bitcoin this coming Tuesday. Let's say if you just like trading 52-week highs. I got low floats. If you're a low floater, you like to trade low floats, I got a watch list that I did back here. I got one. These are all low floated stocks. And I'll go through them and see if any. I used to trade the heck out of any years ago. I made a little bit of money on any. I mean, it was a hell of a trade. And I kept trading in these channels all the way down. Just traded a little snake. And every time it hit the bottom of that channel, I'd take it and run it up. But that was years ago. And they kept getting splits. LMFA is another one that I used to trade a lot. These pennies used to make a lot of money. And all of a sudden they just went, no, I quit trading them. They weren't doing anything. So why trade a sector that's not doing anything? Why get in trouble? And I started moving to big caps, and that became more, I'd say more loyal, because they were always being talked about on CNBC. They were always in the news. And I got away from them low floats. And you've seen what happened. People traded low floats. They're pumpers. A lot of people got in trouble for trading the low float pumps. I don't want to mention no names or nothing like that, but anybody that AMC, that's nothing but a big pump. So I used to trade the heck out of these low floats because they were good at the time, but they're not good anymore. I got what I see in here, solar 2024. So I got a watch list for solar that I can be trading pretty soon. But ENPH has had a heck of a run. Now we pulled back, and this could be, something to be watching here. FSLR's had a pretty good sell-off. We bounced up a little bit, but you can see the volatility in these stocks. SWKS is at my support level. I've called this out a couple of times off this head and shoulders, and we've had a 1, 2, 3, so it'll come back maybe and eventually break to the 200. Break them up in sectors. You come in here, and I'm going to show you another way. I got this platform. They create scans. So I created a scan here last week. And I'll go through these scans. There's a bunch of scans in here. And I'll just go through them and see what's going on. I've got this set up to where certain chart patterns that I like to trade. Then I'll fine tune them when I'm like a double bottom right here. I'll just go through my little scan, and there's Marvel. Now, Marvel's been talked about, being pumped. And I got all kinds of scans. 2% above previous close. These are all watch lists that I could go through every day and try to find a pattern of some sort. This is one that I really like in here. I got alligator. I got many of different alligator. I've got analyst upgrade. Price goes up. ARQT. Now this has got a wedge. Got a wedge, and we're down here at the bottom. So this one here could be able to break out pretty soon. I want to add my indicators. I want to see where the money flow is, and we're definitely undervalued right now. This thing could easily get back up here to this little spot right in here. I want to keep a good eye on ARQT this coming week. I've got these broke down in different patterns. We got any wedge exist. Now we had the bad Costco. They opened that new plant, that new store in China. A couple of years ago, they opened a store in China, and they sold out of their meat, their chicken, and their beef within 2 hours and had to shut the store down. They had like a riot going in there buying food. This looks like a double bottom. I mean, a good little head and shoulders play down here. We got Bank of America. This is definitely going to be on watch. We've had a pretty good sell-off here. Take it to a different time frame. Definitely oversold. We have the 5-day rule. We have a head and shoulders, left shoulder, right shoulder with a head. This thing can probably bounce up, come back up to resistance level at 39 bucks. That's the price control price right there. That's where all the money is. Let me see, CMG, snake, breakout, pulled back, boom. We had a double bottom right here off the shoulder line. That would have been a good one to take. Johnson & Johnson. They were pumping Pfizer on CNBC, and it's in my healthcare sector one, PFE. They say it's way undervalued, and we had a little bounce on it. We got a falling wedge, so this thing can pull back and then bounce right back up and try to break that wedge, which it's already looks like it's already tried to do. So once we break out of the wedge, we come back and retest it, and then boom, everything retest. So I keep that in mind when I'm trading these stocks. Coca-Cola, all-time high up here on the 30-minute. Go to the daily, and we got a nice little V-bottom recovery, pull back. Yeah, I don't know. I know Pepsi got banned in Europe because they're pricing their Pepsi a little bit too high, their Pepsi products. And we pulled back. This is an ascending triangle breakout. Pulls back to that support level. You got little, so I've had this set up so where I can, when I pull up my scan, I can look for these patterns. Go down here and hit ascending triangle, break down. We've got Oxy. Now here's a good one. What's going on with Oxy right now? Does anybody know? We have conflict in Yemen. We have the Red Sea on fire. This has not been valued in yet. With low oil prices, that would be good for airlines, but then we had that catastrophe happen with Alaska Airlines, and it caused all them airlines to pull back in sympathy. So the airline stocks could be a good volatile trade next week. And if the oil prices bounce up, then I might want to play a put in the airlines because I'll know that that's one of their major expenses is oil and gas. So being in the now is very important when you're in you don't want to get stuck. If a stock's got constant bad news and you're in a trade, you don't want to be in that stock. You want to wait for it to consolidate, and then when the good news starts to come out on that, you can add it back to your watch list. Keep it simple and keep it fresh, and I think you'll do very well. Don't overpower yourself. Let me get on my watch list over here, and we'll just go over this one more time. I know what to do. Stay in the now, so we'll go to number 1. Keep it simple and keep it fresh. Start off big and then thin it out. You're getting these off scans and off other people, and only trade stocks that you like. If they're not doing very well and they got bad news, take it off your list. It might come back up later. Play your favorites. That's so important. If you're a seamstress, you might want to be trading brick and mortar, or you might want to be trading Amazon, or find out what you want. What kind of criteria are you going to set these up in? What kind of scans? How do you like to trade? Do you like to trade knives? Do you like to trade 52-week breakouts? Do you like to trade chart patterns? Set your scans up that way. Do you like to trade candlestick patterns? Set your scans up like that, and then create a watch list off of it. And stay in the now. That's probably one of the most important, is keep it simple and keep it clean, and then constantly go through that watch list and be in the now. And that's why you want to keep it small, keep it minimal. I did for every day for 10 to 12 years, I would create a watch list every single day. Every day. I got to where I'd do that every day. Come in the morning, get some kind of inkling of what the market feels like, if we're having a breakout or a pullback, and find out what sector's running. And then I would take my pre-market runners and I would create a watch list, and I would remember what was running that day before or the day after, and that whole week I'd keep the weekly watch list going, and I'd have one every day. And if I seen something on that daily watch list that I had on the weekly, I would remember, okay, why did I do that? Why did I put that stock down? Oh yeah, it had FDA approval. I remember now. I remember one time I got in stock that erased tattoos, because I'm not into tattoos. And I know people that get tattoos regret sometimes that when they get a tattoo, it's there, and they get some kind of laser thing to go over your tattoo and get rid of it. So I thought that was a good runner, and heck, if it ran $10 from 5, and then once I got my run out of it, I got out of it because the news failed, and that's going to be like trading Eli Lilly. They're going to end up stop talking about this thing, and it's going to start getting less volume, and we're going to find some reason on a pattern why to get out of it. Maybe we're squeezing into an upper wedge. Pretty much it's just a straight uphill climb. So we broke the 5-day rule. Maybe soon it'll start to pull back. It'll stop talking about it, and some other thing will take its place. Then we bring it all the way back down here to a triple bottom, 1, 2, 3B, and buy it at 610. But if it breaks this trend line and it breaks that 50 SMA on my 1 hour, I'll run it to the 200 even. It bounced off the 200. It found resistance off the 200. So this thing could easily jump back down and stay above that $600, and that's still hugely up from 178 to $600, and that's the top of that channel. I'm going to put a support right there in case I want to buy it. At 609, if it pulls back to 609, I might take that trade. This thing's been pumped religiously every day, and then the Bitcoin ETF got in its way a little bit this week. But they'll bring the doctors on. They'll keep talking about it because it's going to save so many lives. I mean, obesity is a big issue in America. I keep pretty thin. Because I've been athletic, and I have epilepsy, and I can't be that big. I have to maintain my weight, and it's a psychological thing with me. It has nothing to do with even health. I just think people should take better care of themselves, and it all has to do with how you eat. You don't have to take a fat drug to lose weight. In most cases. My sister had a tummy tuck. She was about 350 pounds. She had to do something or she wouldn't be here today. She's just a little bitty shit. I mean, she looked like a teardrop. It was bad. But this is a big thing. There's, I think 65% or maybe more than that are obese in America. And about 45-50% are overweight. So it's a huge thing, and if it does more than just lose weight, if it keeps you from getting Alzheimer's and it lowers your blood pressure and it keeps you from having diabetes, that's what they're pumping in this trade right now. So I've been shorting it because it's just irrational exuberance, just up way too much, way too fast. I keep that in mind every time I see a 52. It's hard for me to trade 52-week breakouts. Yeah, I'm the worst. I'm the worst at it. I'll just wait for it to pull back, and then if it's still got the great news, I'll take the trade and run it up. But that's being in the now. That's my strategy that works for me. I trade, with traders that are just the opposite, and we clash. Because I can't trade 52-week highs. I'm just no good at it. But I'll take it if it pulls back, and then I'll look for a triple top break or a double top break. On a double top, if it pulls back, I'll run it to a triple top. I can do that real well. Apple is the best example I could possibly give you. And that's it. I think I probably overdid it, but I'm wondering how many people are still in here. I haven't even looked at the chat room. We got 9. Does anybody have any questions? And we're going to go over some stocks. If you want to mention any stocks. Very important to keep a watch list. I can't tell you how much it is. And only make it 10. Make it 12 stocks. Start out with 20, 25. Thin it out. Break them down in sectors. Sector run. You'll have sector runs that say, the airline stock. I don't know if I had done one up. I used to have one of airlines. I don't know if I have one now or not. I should. I'm ascending triangle right here. AUVI. So I pulled up an ascending triangle scan that I have. Whoops. I have volume of 500,000 or more. I have the bid price at $1 to 10. And I have a percentage of the stock to break out above 5%. So anything that broke out above 5%, these are penny stocks. I could add a float feature to it. Let me see what else I had on here. And I had it set up for an ascending breakout with 50 to show only 50 of them. So it's got, you can put different kind of descending and ascending. You could have it breaking out or you could have it pulling back. Descending means going down. Here's one, blue. Now, someone asked me about blue last week, and I said we'd pull back a little bit. It's being pumped. And finally, we hit my lower support down here on the Fibonacci at 136. And we bounced off that 136. That was a previous double bottom. So I used the Fibonacci's. Fibonacci extension. I started it from right here. For some reason, we got the extension to go up. So if this gets ready to break this 150, and I know a lot of people are pumping this thing, or some are, 153, 163, and then 179 on the extension. And then I'd probably get out of it if it even moved up 40, 50 cents. Hit 163, started to break above it to 179. It's not a very, very big number. You buy 1,000 shares of it, spend $1,500 and make 200, almost 300 on it. If it decides to break out. Where did I get that off of? Come on, Jim. Oh, here we are. So I look on here and I see if anything's familiar. I'll look at the big percentage breakouts right out of the gate. I'll see if there's any good news on them. So I want to put my news, have my news up. I want to see what's going on. AUVI. Applied UV. I want to see if there's any news that would bring this stock to run up like it has. Announcing product launch. This came out on the 12th. Shares jump after hours, or shares jump. I want to read what it is. Flex LED Solutions, stock, and I'll read it headline real fast, and I'll see what it's doing. If it's something that I'm interested in, let's say if it had something to do with LED lights, and it was for a cannabis grow room, I want to look up the website. I want to see if how it's doing. But it had news, had a reason to pop. If it has a reason, upbeat earnings. Oh, that's JP Morgan. The next percentage high we hear was SYT. I want to check out the news. Had a lot of news here. Became the largest shareholder, so somebody bought into it. Well, they bought something. They acquired something. So that could be a catalyst to maybe run it up, but I don't think I'd put too much gravy on it. It's got to be a FDA approval, or now a lot of these low floaters, if it's a split or an offering, I won't trade it. A lot of low float pumpers will trade it because it lowers the float on a split. That's the only reason they'd trade it. I wouldn't trade it. I'd wait for the pullback because it's not good news for me. So from here, start you a nice little watch list. I'm doing high volume movers. That's how my watch list works out. I'll come in the morning. I'll see what's pulled back. I might have to thin some of these out now that the coin thing is. I'll see what's broke out. Then I'll check out the volume highs to make sure, is there a reason? Tesla, I've got a 214, 210 target on Tesla. We didn't hold this, but we're getting ready to come to 300, the 300 EMA, I think. Might be a good buy once we hit this support down here. This is a head and shoulders. So I want to draw a trend line across that. I'm a chart pattern kind of guy. I'll take that shoulder right there and run it on that. And it takes me right to around that 210 area, 207. And I think it'll hold support there and have a nice little bounce back up to the 200. But I ain't going to take the trade because they've closed the plant in Berlin down and constantly getting bashed. Elon, this week, CNBC says Well, Elon's been doing too much drugs. The board has major concern. And they mention acid. The establishment doesn't like Elon. He more or less told him to F off a couple weeks ago. And Bob Iger. And that's another thing. Let's say I got a woke watch list. Anything that has to do with woke that's being controlled by BlackRock. So I called a put. I said Disney's going to go down, 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 and then they've been pumping it. They pumped it. They said, I forgot what they said, but they were having the CNBC and everybody was starting to pump this stock because it got to be where it was so cheap. And if you look at it on the 3-year, we had a big old long snake. We broke out once, and then it came back down here and found support. What created a head and shoulders. So this thing pulled back to that shoulder line. Once we hit this 88.19, I'm going to take this and run it back up. They pumped the heck out of it right here. The fat cats. They loaded the boat. Target was another good one. And it was all I had to do. Budweiser was another good one. Target selling devil stuff in their stores. We had the triple top and it pulled on back. Then Christmas came, or just everybody loaded up on everything. It was cheap. After Pow Pow got his little speech in, we had Nike. Tiger Woods left Nike last week, caused the stock to pull back. Being in the now. We got a head and shoulders right here. I don't know if I got that on the yearly, probably. Yeah. There's the yearly. So we have a nice little cup and handle. This thing can run back up and hit the 200 and find resistance. And that's about a $3 bounce. So I had a woke watch list. Nobody had a woke watch list but me. I did videos on it. I said, we're down here at the bottom, folks. Better get ready. Nice little run. Now we pulled back. Earnings. So I don't shop at Target. I think it's a 5 and dime store myself. I'd rather spend my time in Walmart. The grocery department's really bad. So create them in sectors. This coming week, it's like I said, it's all going to be about earnings. My watch list for the next month is going to have everything to do with earnings. I'm going to be catching knives. My strategy is a knife catcher. So these stocks run on algorithms. 1 minute it could be down and then right back up. Depends on the earnings. So that's my game plan. This week, I don't know what's going on here with still not doing very well. Hope I didn't piss anybody off. Alrighty, that's it. It's very important to have your little watch list going. Does anybody have any questions? Alrighty, that's it. This will be recorded, and I'll simplify it, make it a lot simpler, so you won't have to watch this whole 2-hour, hour and a half, hour 45-minute lecture. let's go over some stocks that I'm going to be looking at this week. Get your pencil and paper out. I'm definitely going to be watching Oxy. We had a 1, 2, 3 here, and we run up. Now Buffett owns 27% of this company, and he's not going to let it fall below his bargain price. He's in it right around 56.70, and we bounced off that 56.70 on the daily. So if we dip on back down to where his average price is, he'll probably be adding on more. Right now we got to break the 9. If we break the 9, we'll run up here to right around the $59, $60 level. We're going to have some issues. We got to see how Yemen reacts. I heard we really hit them hard here. We've had a second attack with them now. My reason that I told the room, I said I'm not going to be very ambitious until I find out what happens with North Korea president and what's going on in Yemen. That's a real serious situation, and the market's very bad at pricing in geopolitical stuff. You know, fortunately, I was trading stocks back when 9/11 happened, and I got in some good trades there when we had the knife in the market. Same thing with Kuwait. Same thing with Syria. Same thing with Obama. When Obama, I told everybody 2 years in advance, I said, we're going to have a crash, and nobody believed me. And they said, why? And I said, well, listen to our next president. Listen to every one of his speeches. It was all about share the wealth. It was all about reorganizing Wall Street. It was about tackling the fat cats and the big jets, and it was that's all it was. Every single speech had something to do with redistribution of wealth, and we had a crash. People were scared, at least I was. And they blamed it on real estate bubble, which probably had, the market crashed. They were given loans that happened during the Carter and Clinton years. Carter first started the Housing Act, and then Clinton vamped it up, and then we had the bubble in Fannie and Freddie, and they both went down to like 50 cents a piece. So I was trading Fannie and Freddie back then. General Motors hit 50 cents. Ford hit $1. Bank of America under 5. Harley was at 9. I took Buffett trade on that one. I had a chicken poultry plant that went down to 17 cents, went back to 5. We had the same thing happen during the second term of Brandon. We had another crash because of the Ukraine war, which could have been prevented. I wrote a song back in September, the month to remember, and the market just ran up. It was pretty easy to digest. On the weekly time frame, we bounced off the 200. We had 3 black crows. And then back in September, I wrote a song. I said, this will be the month to remember. At the end of the month, and then bam, called out the head and shoulders. We hit that head shoulder line, pulled back again, and now we're at the double top. So I'm very reluctant. We're going to break it. These guys are so bullish, it's beyond belief. If we get a little being in the now, if earnings are just a little bit better than expected, they were very disappointed Friday. Everybody was very disappointed, but they kept making excuses why the market pulled back. Oh, it's Boeing's issue. You know, Boeing brought the market down. It's going to come back. Bank of America, don't worry, banks will come back. I don't think just a little inkling of some good news is going to cause this, because we're in a very bullish market right now. These guys are at extreme greed. Down here, I was saying things were cheap. Now I'm saying things are very overpriced. But if they keep it up, I was kind of wanting to hold that 9, or maybe hit this previous and then buy the boat, load it up, or maybe even down to this shoulder line. Oh, that ain't what I want. If we hit that 45.51, that'd be a sweet trade. They're saying the $4,800 is a hard resistance. They were saying it last week, but they weren't saying it. They were not saying it in the new year. They didn't want to say it. I said it. I said, man, we're at a double top. Please be careful. Just please be careful. And we had a pretty strong pullback. So we're gonna break it because they're so bullish. And then I think we're still going to be way overbought. Why do I say that? Because they priced in 6 rate cuts. Now they're talking about maybe delaying it. Maybe 1 and maybe 3 at the most. And then maybe 5 next year. But that's going to cause the market to break this triple top. And I showed this one pattern here. And I'm a triple top kind of guy. So here we got 3 years of a triple top. Resistance, resistance, resistance. This thing wants to break. It's getting ready to squeeze. If it goes down below them support levels, it'll be a real strong buy. Real. I'd probably put 60% of my portfolio in this. If it pulled back to there. If not, we'll break it out. Then I'll use this here old resistance as a support, and I'll start loading up from this here area. But we first got to break it. And that's at 48.18.62. Once we build upon that number, that'll be the thing to do. 4,800 level. The S&P will continue to meet resistance around the 4,800 level, says J.P. Morgan, Jason Hunter. They weren't saying that stuff at the end of the year. I was. Again, I'm 2 weeks ahead of them. I think charts really matter. I'm a chartist, not an artist, not a fundamental trader. So that's it. We'll catch y'all later. Have a blessed day. I hope you got something out of how important and how to build a watch list. Don't get complacent. The market's always reinventing itself, and there's always something new. So there's always a reason to make a new. This week was the airline watch list. Let's go through some of them. Let's go through Dow. Let's go through some airlines. Let's start off with Love. Southwest Airlines. See how cheap they are? We're at $28. We're twiddling around this here support level. That's on the yearly. We come up and hit the 200 at a double top resistance. We could pull back here and hit a double bottom. And you got support level right here off this previous low. We saw that once, we saw it twice, and we could see it one more time. And that would be a head and shoulders. We can squeeze back and run this back up to the 200. Be about a $1.40 play, and then that would be a triple top if you count the bodies. If that body hit it, and it could break that resistance. They're pumping airlines right now. That's Dow. Next. Dow is the most talked about stock right now with the most respect. We had a real good sell. This is going to be in play this coming week. I guarantee it. We hit the 50 SMA. We had the 9 cross the 21 down here, and I called these out when we were down here. We hit a double top. The tragedy came, and then boom, we hit a double top, so that's resistance. Anytime you see a double top, get out of the trade. We came back and hit the 200 and bounced up and hit that double top. We could easily bounce off the 50 and run it back up and maybe get out here right around the 9 at 41 bucks. So that'd be a $2.50 trade. Swing for next week, Dow. And how would I trade it? Let me see. So I'm looking at UAL. This is called a broken butterfly. I'd buy the 40, we'll do UAL. I'd buy the 43 call and I'd sell the 47 put. Call, sell it, and then I'd buy the 48 call, and that comes to 87 bucks. This would be UAL. This would be a long-term trade. February 16th, maybe even longer. I'd take it, out a month and trade this. That's called a broken butterfly. Dow. This week's scalp. They're cheap right now. I'd probably get to 38 strike. Or maybe the 39, but I'd probably get 10 of these if we hit the 50 and then hold on to it for a couple of days and then get out of the trade. Or I'd go out farther, February 16th. And I'd be in the money, or just right outside the money if we hit the 50. Or I'd look for the biggest volume winner here. But I'd no lower than 40 bucks. And I'd buy 10 of them or 20 of them. And I'd have till February 16th. And it will rebound. Dow's the one. Right now, Dow used to not be the one. Used to be UAL. Then you got AAL. Got earnings coming up. So this would be a trade into earnings. They're all making good money. $13 strike or the $12.50 or even the $12. Everything sympathy play brought all these stocks down to a good price level where you can really, I think, make some good money on them. It won't affect AAL. It won't affect Dow unless they broaden the inspections, just not to this aircraft. But that aircraft was only 3 months old. And that's another reason why I think the whole plane needs to be looked over. And then Tesla. The news on Tesla with Hertz last week. See, this EV car deal, this green energy crap, is ruining companies. So Hertz comes out and they say we're going to knock off 25% of our fleet and we're going back to gas combustion engines because they're more reliable. And that's what caused Tesla to drop a little bit, besides the Yemen thing. It's cutting off circulation to parts and stuff like that. They have to go around, which is going to be more money on oil. So I'll be looking for Tesla. We had a bad week for Tesla. Maybe this coming Tuesday, it might be the day for the rebound. We get one more little knife. So this is a weekly trade for me. And I'd be looking at that 220, especially if we drop down a little bit more. Maybe the 220, 250, but I like to do an even odd number instead of this rigmarole when I'm trading them. The video, don't take your eyes off it. If we get a little bitty pullback on video, watch these prices. Look at the volume. I got the delta on here right now. Implied volatility looks high. Open interest. As long as I got less open interest than on volume, I'm interested in the trade. The Eli Lilly put. I'll work against these guys. I'll try to get as close to the money as I can with the highest volume at a reasonable price. Maybe this 330 at 281 if it gets down to like 220 or something. Buy 5 of them. I don't go more when I trade. I don't put a lot of money in. $1,000, $1,500 is my average cost, unless I'm in trouble. And I come in and I trade the SPY every morning and the SPX. I'm real good at trading these two. I've been practicing trading the SPY and the SPX for over 2.5, 3 years every day. And I've got to where I've got about a 99% accuracy rating on it. I was in SPX and I took a small loss and then the damn thing bounced into close. I was so upset. I took $300 loss and I could have made $150. So on the SPY, I just go the next day out. And on the SPX, and I'll look for the big volume winner, and I'll try to keep it as close to the money as I can. And I won't go too far out, maybe 1 or 2 steps. And the SPX, I do it in the same day. And I'll look for volume. If I can get an SPX for a couple $100. Yet last week I had one go to 2,200. I had one go to 1,200. I got in the one that went to 1,200, and that was good money. But man, I was shaking my head the week before when they went to 3,000 to 5,000, a $230 option, and I was in it, and I could have walked away with $50,000 in one day. 10 contracts. They went to $5,000. So that's why my best trade is the SPY and the SPX. The other ones are a lot more riskier. But I wait for that pattern. I got to have a pattern. And I've got a bunch of videos that I've done with the 21 and the 9 and the snake. I did a seminar of a snake a couple weeks ago. And it's really good if you want to learn a strategy and you don't have one. So we broke out, and then we pulled back that next morning. So you've got what you call yin-yang. Pulled back, break out, pulled back to the top of this here support level. And boom! Pulled back to the 50. You have a double bottom into close. I use the 1 minute quite a bit. We have a snake. 1, 2, 3. Boom. My strategy is based on 3 numbers. I made it to where it's almost too easy. So let's say I'm watching the SPX and we're having a knife. And she breaks out. We got a little snake right here. She breaks out of the snake, pulls back. Now I've got that going on. So I created a new one. Come in here, 1, 2, 3, and it didn't break out. So I wait for that final 3 down here. 1, 2, 3. And if it doesn't break out of here, I get out of the trade. It has to break out of here. There's no ifs, ands, or buts. If it doesn't break out of here, we're going to knife. We're going to knife. We're going to knife. We're going to knife. It has to break out of this 1, 2, 3 down here and come up here. If the trade is no good, if it comes down for the 4th time, it will definitely fall on you. Called this trade out. These 2 big old candles. Then we went sideways, and I created a little box. Once we come out of it, we broke out of it, boom. Now this one here was definitely a shaky one to take. But I'm looking at these candles that come out of these knives, out of these little big engulfing candles. So we broke out, and we came back and found that support. Once we found that support, what was resistance now became support. So we had 3 black crows. And we had an ascending triangle, which is very bullish. That's called an ascending triangle. So we come out with the crows. I talk about these all the time. This is one of my favorite trades. And I'll count to each crow as a resistance level. So if you count to 3, you can trade with me. 1, 2, 3, we broke out. This don't count because we didn't hit that trend line. But 1, 2, 3, boom. That was a big dollar trade right there. I got out at the 200. I made a big mistake. We did pull back, and I took my eye off the ball. So we had 2 or 3 different good trades out of this. Had a falling wedge. We had 1, 2, 3 breakout. Pulls back. Then we got an inverse head and shoulders. There's your shoulder line, came back to the shoulder, traded that wedge, and then hit that top, that trend line. Boom. It just repeats itself. We've got another snake here. We almost broke out of the snake here. Then we finally broke out of the snake. You wait for the pullback. Then we created inverse head and shoulders. Boom. Here's your wedge. Falling wedge. Once you broke out of the snake, there's your 1, 2, 3, boom. 1, 2, 3, boom. Then she pulls back and retests that trend line, runs up, breaks out. That's it. So I'll probably sit here and do a couple more videos and put them out. I'm going to redo this one I did right here because I recorded it, but I'm going to redo it, make it a little bit more simplistic. Because I've been on here for 2 hours now. Go in there and make me some lunch. Maybe watch a movie, watch my videos, and try to educate myself more. I want to study what was I was looking at earlier? Dow. I want to see why. I used to be very negative on Dow, but I'm getting all these fat cats are talking about Dow right now, and one of the ladies in the room talked about Dow. Says a lot of her friends like Dow, Delta Airlines. I think I'm going to start flying them myself. I ain't going to fly American. I ain't going to fly. I can't think of it now. American Airlines. Not that one, but the one's in trouble. UNA. I can't even think. I'm having a flashback. Let's kill it next week. Martin Luther King. Don't forget. Have a great day.